Hello and welcome back to my YouTube channel. My name is Joshi and I'm a real estate broker working in Toronto in the GTA.
Hi everyone, my name is Omair Amir. I'm from the Six Mortgage Group, a mortgage broker in Toronto. Thanks for having me on.
Awesome. Omair, I have a very interesting question for you. I'm hearing this from a lot of my clients. We are seeing that the Bank of Canada is decreasing their rates. They just did a rate drop today and 2 additional ones earlier this month. So the question is, if the Bank of Canada is dropping their rates, how come some lenders on new mortgages are actually increasing their rate?
Yeah, that's a very good question, and when we're getting this question from a ton of people right now, a lot of our clients are calling asking the same thing. You know, they're watching the news, and the news says Bank of Canada is lowering its rates. Just like you said, we've seen Bank of Canada lower by 1.5% in just March alone. Yeah. So what's happening? Why is Bank of Canada lowering its rates, and the banks at the same time are either increasing fixed rates or decreasing the discounts available on variable rate mortgages? So it's a bunch of things. There's not one particular reason. There's many reasons behind why this is happening. So let me try to explain it to you. First and foremost, you have to understand for fixed rate mortgages, rates are based on the bond market. So even though Bank of Canada can continue cutting its rates, but fixed rate mortgages will always be based on what the bond market is doing. Okay. So even though bond market has not really gone up, but fixed rates are still trending upwards. Lenders are increasing their rates. So why is that? Well, the major issue is actually liquidity. So liquidity means access to funds, how much money the bank has. So let me put it this way. Banks also use money that they have on deposits from investors to lend out on mortgages. Right. So if the Bank of Canada's rates and overnight rate is like, at 0.25, that's how your investors get paid as well. So if you're an investor and I'm only paying you, let's say 1.5% interest, do you really want to be lending that money out to me? Right? Yeah. So what's happening is that that less money is flowing from investors at this point in time into the banks. And banks are not able to lend that money out on mortgages. So that creates a little bit of a liquidity crunch for the bank itself. The second thing that also creates a liquidity crunch is basically the market that we're in. So when you have a lot of businesses and institutions, and these institutions and businesses now basically know that their revenue streams are going to be impacted. So if you're in Canada, for example, right, and you expect your revenues to be hit by a certain volume, and you're not going to be taking in the same amount of income that you do on a regular basis, then what do? You start leveraging, right? You take more money out, you borrow more money. So this is happening across the board, not just with businesses and not just with institutions, but also with people. So also with regular clients, right? So because there's so many people that are now leveraging and borrowing money, again, same thing, liquidity crunch happens. Right? So that pool of money that the banks usually have, there is a limit to it, right? And when they see that there's somewhat of a shortage now, based on the market, they have to price it accordingly, right? Now, while this is happening, another thing that adds to kind of this liquidity issue is volume spikes. So volume spikes have happened, right? So banks have experienced a massive amount of volume from refinance applications, equity takeout applications, right? Because people are concerned, right? What was it? Just under 1 million people applied for EI last week, right?
That's insane. Yeah. It
is insane, right?
Yeah.
So that makes everyone wonder, wait a minute, what's going to happen to our job? What will happen to our company? Right? Yeah. Could our business go under? Right? And maybe when all this is happening, this is the right time to refinance, take some money out, have some money for the rainy day, right? So banks are seeing a massive spike in volume because of that as well. The third point is just general business, right? Forecasting. Every business forecasts. Right. Forecasting is very, very important. Banks are no different. Banks forecast not for today, but 6 months to 12 months down. That's how they forecast. Right. So even though rates are super low today, banks are looking at what could potentially happen in the next 6 months, 8 months, 10 months, 12 months, right?
Right.
So banks are looking at it this way. Right now, yes, we have excellent volumes. We're doing $50 billion in lending, $60 billion in lending. What will happen 6 to 8 months from now? Will this go down? Right? Because all the rates that they give you, all the discounts that the banks offer you on interest rates, they're all based on forecasting.
Yeah.
Right? They base it on, okay, we're gonna discount our mortgages by X amount, but we're gonna sell X amount, and we're gonna make X amount.
Yeah.
But obviously, if their forecasting changes and they think that, wait a minute, we may not be able to do this amount of business in the next 8 months, what do we have to do? We have to raise our spreads. So banks are increasing their spreads. Also, banks are also worried about what could potentially happen in the market if this continues for, let's say, six months to 8 months, right? Like I said, there's already 1 million people, or just under 1 million people, that applied for EI.
Yes.
If this trend continues, could people possibly lose their houses? Could they be out of work for a significant amount of time?
Right.
So if people are gonna, if people can't make their payments, and that's another thing, banks have been talking about payment deferrals.
Yes.
So if thousands of Canadians start deferring their mortgage payments for 6 months,
yeah,
what happens to the revenue that the banks are supposed to get?
Right. So they're not going to be able to collect the money that they need to be able to lend out at attractive rates.
Yeah, it basically affects their bottom line, right? So whichever way you look at it, banks are businesses, right? So, yes, you're going to have people that are going to say, oh no, this is not a skip a payment, it's a deferral in payment. So your interest is going to get added back on to your principal balance. But again, if you've lent, $1,000 to a buddy of yours, and you expect him to pay $100 a month, if that $100 a month stops for 6 months,
you're taking a hit. Absolutely.
You're taking a hit, whichever way you look at it, right?
Yep.
So banks are mitigating potential losses as well by increasing their spreads. And also, you have to keep in mind, Bank of Canada is not lending money to clients.
Right.
Bank of Canada's customers are the banks.
Yes.
So all this policy easing, it's not just so everyone can get a free ride. These policy easing is to help out the banks. So banks have liquidity at hand. Banks can mitigate their losses. Banks can continue to do business the way they've always been able to do. We have to keep the integrity of our financial system intact, because at the end of the day, banks will have to support many, many, many businesses. And I'm telling you, Canadian government will come in. The federal government will help out with hundreds of thousands of dollars. They're going to pour that money into the real estate market. They're going to pour that money into the financial markets, and it will be needed. This is a tough time, but hopefully this explanation kind of gives you a little bit insight why banks have decided to increase their rates a little bit.
Yeah, absolutely. That was really helpful. And I think a lot of people are, wondering this, because what you hear in the news is, what the Bank of Canada rate is doing. And then when you're going online and checking your bank's rates, a couple days after, it's not reflecting necessarily the same trend. So I think it was key to understand why that's happening. So thank you very much for sharing that information. If you guys have any other questions about real estate or what's happening in the mortgage market with banking, definitely feel free to reach out to us. Omair, I will put all of your contact information below in case anyone wants to reach out.
Thank you so much.
Absolutely. So thank you for being on the video today with us. To all of you, thank you so much for watching. Please hit that like button if you thought it was helpful and you valued Omair's explanation of this very, very interesting thing that's happening right now in the market. And feel free to subscribe. I do post new videos about real estate and mortgages every single week. Thank you guys for being on the call. I'll see you guys on the next one.
Take care.
Bye, Omair.
Bye-bye.